Welcome back to my YouTube channel. And before you continue watching this video, please subscribe to my YouTube channel. We have a target of reaching 1,000 subscribers in the next 30 days. Without much ado, let me introduce this question. And this was tested in August 2023. So I'll read the question. The question was more or less of forecasting. So I'll go through the question. ZD Limited has just completed its strategic plan for the next 5 years, commencing 1st January 2023. The company is optimistic about future performance and would like to prepare forecast financial statements for the years 2023 to 2027. The actual statement for the year ended 31st December 2022 with the projected growth rates are provided as follows. So we have revenue all the way to, this is the statement of profit or loss for the year ended. So we have the annual growth rates here. And we have statement of financial position as of 31st December, and we also have the annual growth rates. So let me go to additional information. So additional information, number one, is that finance cost is 5% of the previous period's bank loans. So it's 5% of the previous period. So let me just note here, 5%. Let me just change this. Change this to percentage. Then the next one, tax will be on average 25% of the profit before tax. So the tax rate will be 25%. Then the company will maintain the same dividend payout. So let me check the dividend payout. The dividend payout here, dividend comes after profit for the year. So dividend paid was 100 in this case, and profit for the year was 380. So the dividend payout, we will change it into percentage. So I'll take the 100. I'll take the 100, the dividend which was paid, so that I can know the dividend the dividend ratio, the dividend payment ratio. So I'll pick that. Then I multiply by, I divide by 380, sorry. So the ratio will be, let me change it into percentage. It's a quarter, but percentage, it will be 26.32%. So that means that you take the 26.32%, you multiply with the profit before tax, then you get the dividend, the profit after tax, sorry, the profit for the year. So you'll take the 26%, you multiply by 380 to get 100. That's what the ratio is all about. So apart from the beginning of year 2025, when the company will raise more equity comprising share capital of shillings 500,000 and shillings 100,000 share premium, the balancing figure in the financial statements is the bank loans. From 2025, as we do forecasting, there will be an increase in share capital and share premium. So required, the forecast financial statement for each of the years from 2023 to 2027. So this is what we'll do. So we'll do first for the statement of profit or loss, then the second one for the statement of financial position. But recall, the forecast was from 2023 to 2027. So this is what we'll do. I'll start with 2023. See, let me put it here. So I'll start with the 2023 should be there. So I'll start with 2023. Then I told you that the quick way to fill, you just go to fill, then you go to series, and you check, is it in a row? It's in a row. Then my step value is 1. Then I'm ending in 2027. So just like 2027. Then you say, okay, so these values fill automatically. then just come here and change to general. Yeah, so we'll have from 2023 to 2027. So I just bold it. I'll bold that, then I'll create the bottom border. We'll create the bottom border. Yeah, so I'll start with the statement of profit or loss. So I just say here, I just say a statement of profit. Statement of profit or loss. So I just highlight this, then I'll bold it. Yeah, then the same I'll do to statement of financial position. So I just write statement of financial position. And we also bold this. Yeah, I'll bold it. Then, so we'll also start from 2023. Let me just say up to 2023. So I'll just copy. So I just say equals, then I copy that. Then once I'll just drag. Yeah, up to 2027. Then you just change this to January. You change that to January. Yeah, sorry for that. So let us continue. So I'll also create the bottom border. Then I'll bold that. Yeah, so I can now start the forecasting. I can now start the forecast. So what I'll do, you can as well copy this, or you can just do them along the line. So I'll just do it along this line. If it is revenue, it will be for that. If it's non-current assets, then it will fall along the line. But it's good also, you can just copy this, then you paste this other side. So let me see. Let me just copy. So copy, just control, then C. Then you come here, control V as you paste. Yeah. So once you paste, the whole information will appear there. Yeah. So you will do the same to the statement of financial position. So I just copy this. Control C. And you just come and say Control V. And you'll have everything copied. Yeah. So it's easier that way. Yeah. So I'll start. And even as I start, I'll take into consideration the additional information. Yeah. So I'll start with the revenue. Yeah, start with the revenue. So I'll do this as I do this, because here we are told that the finance cost is 5% of the previous period bank loans. So there are instances I have to get the previous bank loan, and bank loan I can only get it here. Yeah, so I'll do for the first year, then we do the adjustments as we continue. So I'll start with the revenue for 2023. So this is what we'll do. So for forecasting, I'll take the revenue for 2023. Yeah, the values for 2023. Then I multiply by 1 plus the growth rate. The growth rate here was 10%, and I lock it. I lock it completely. I lock it completely. So you shift, then 4. You shift, then, or you look at the F4 button. So just click the F4 button, then you close, then you enter. So I love that. So once I've locked that, so I'll drag. Yeah, sorry, it still doesn't copy. So I'll go to the second one. Second here, then I pick that. Then I'll be 1 plus the growth rate. And I lock this by F4 and I enter. So once I'm done with that, now the formula, the Excel has copied the formula. So just drag it. Yeah, and you have your values there. So I'll go to the cost of sales and I'll do the same. I'll pick for 2022. Then I'll multiply by 1 plus the growth rate, which is also 10% here. But I'll lock this F4 with an F4 and I'll enter. Yeah, so I'll do the same to the second year. I'll pick for 2023. Then I'll multiply by 1 plus the growth rate. In this case is 10%, but I'll lock it so that I can be able to drag. Yeah, so I'll lock it, then I drag. Yeah, so the gross profit is the difference between revenue and cost of sales. So I'll just say equals to sum. Yeah, because the cost of sales is already in negative. So I just sum these two and I'll get 1,100 and I'll drag all through. Yeah, so it's copies all through. Copy that all through. Yeah, so I'll go to the next thing is that mean expenses. So I'll just come in and say equals to, and I'll also forecast it. It is times 1 plus 5%, but I'll lock the 5%. Yeah, you lock the growth rate. Then the next, for 2024, I'll pick the 2023. Then I multiply by 1 plus this, then I lock it completely. Enter. So once I enter, I'll just have to drag that all through. And then I'll go to distribution costs. And I'll pick this. Then I multiply by 1 plus the growth rate, which is 10%. So I lock this completely with an F4. I enter. Yeah, so the next thing, I will pick for 2023. Then I'll multiply by 1, bracket 1 plus the growth rate, which for distribution is 10%, and I lock it completely. So that once I have that value, I just drag from here. Those values come automatically. Yeah, so finance cost, we are told that the finance cost, additional information number 1 is that finance cost is 5% of the previous period's bank loans. So I'll check the previous period. So when you are in 2023, the previous period will be 2022. So I'll go to 2022. Where is 2022? And I check the bank loans. What is the bank loan in 2022? Yeah, it's here. So the bank loan here was 2,000. So I'll pick 2,000. And I multiply by 5%. Because that's what we are told is the finance cost. Is the 5% of the previous period bank loan. So I'll pick the 5%. Yeah, just pick it there. And I enter. Yeah. Yeah, so let me change this to negative because it's supposed to be negative. So yeah, so I love 100 as finance cost. Sorry for that. Sorry for that. So after that, now we are told that yeah, in additional information number 4, we are told apart from the beginning of year 2025, yeah, so let us continue. So I'll go to now. I'll calculate for 2023 all through. Yeah, because by getting this now I'll be able to do the statement of financial position easily. So I'll start with 2023. So the profit before tax here will be equals to the sum, yeah, from gross profit all the way. Then I enter. Yeah, so the income tax expense we are told was 25%. It was 25%. So I just pick the 25%. And because it's constant, let me just lock it. Then I'll multiply by the profit before tax. Yeah, and I want to be negative. So I'll introduce a negative sign before for that. So I'll get 129. So the profit for the year with the sum of profit before tax and income tax expense. Yeah, this. Then dividend paid, we say that the dividend payment ratio, it's already here. The percentage is there. So I'll just say equals to, I'll pick this, then I'll multiply by this. So the dividend will be 102. So the retained profit for the year is the profit for the year plus dividend paid minus dividend paid. So just equals to sum. I'll sum those two. Yeah, so the retained profit brought forward is the retained profit carried forward the previous year. So I'll just say equals to, then I pick the retained profit carried forward. Yeah. For yeah, the retained profit carried forward for 2022 is now the retained carried brought forward in 2023. So I just enter that. Then I'll sum these two to get the retained profit now carried forward. So sum these two. So I love that. Yeah, so with that, because we are told under additional information number 4 that apart from the beginning of year 2025, when the company would raise more equity comprising share capital, and this, the balancing figure in the financial statement is the bank loans. Yeah, because now I can't get the finance cost here because I don't know the bank loan for 2023. For me to get for 2024, I'll have to take 5% for the bank loan of 2023. But I'm told it's the balancing figure in the financial statements is the bank loan. So I'll start the forecasting for, statement of financial position. Yeah. So for 2023, I'll start with the one for 2022. So I'll pick this. Then I multiply by 1 plus the growth rate. So the growth rate will be 5% and I'll lock it completely. Yeah, so I'll lock it and enter. So I'll go to the next year. So the next year, 2024 will be 2023. You multiply by 1 plus the growth rate, which is 5%, and I'll lock it also completely. And I'll enter. So once I enter, I'll just drag on through. Yeah, I'll drag that on through. Yeah, so I'll go to current assets. I'll start with inventory. Inventory was 310, but there was a growth rate of 1 plus the percentage growth rate, so 10%. And I said you lock it. Yeah, so once I lock that, just come to the second one. I'll take 341. I multiply by 1 plus the growth rate, which is 10%, and unlock it also. Enter. Yeah, so once I enter that, I just drag all through. And then I'll go to receivables and do the same. With that times 1 plus the growth rate, which is 10%. Then I lock it with an F4, and I enter. Then this for 2024 will be 2023 times 1 plus 10 and pick F4. Then I enter. So I just drag this on through. And I'll go to the next one, cash and bank. Pick 120. Then I multiply by 1 plus the growth rate, which is 5%. So I lock this completely. And the next one will be now for this times 1 plus the 5%. Then I lock it also. Then I enter. So once you drag, yeah, that will be okay. That will be okay. So I'll add the current assets here and sum them here. Yeah, just follow this format. So I'll sum all this. Then I enter. Then I just drag. Yeah, then I'll create. Let me create a top border here. Yeah, then I'll come now to total assets. And total assets will be this current assets plus non-current assets here. And then I'll just drag this on. Yeah, and it has copied. So I'll go to the next. So the total assets, I'll just create a bottom border here. Maybe top border. Then again, I create a bottom border. Let me just create a double. Yeah, let me create a double thick bottom border. So I'll create a thick bottom border there. Yeah, so I'll go to ordinary share capital. Yeah, and there was no growth rate, so it's constant. So I just say equals to, then I take the 1,000. Then we were told, and additional information number 4, that apart from the beginning of year 2025, when the company would raise more equity of 500,000 and 100,000 of share premium, the balance is there. But so it means from 2023, 2024, we'll have the ordinary share capitals to be 1,000. Yeah, but when it gets to 2023, they raise more of 500. So it means it increased from 1,000. Yeah, these are 1,000. Then you add 500. It was 500,000. But we are using these values are in thousands. Yeah, so we'll add that to 500. Yeah, so it will be 1,500. So it means that it was 1,500 all through up to 2027. So just say equals to, then you copy that. Yeah, that's all. So the share premium also changed at the beginning of 2025. So what was the share premium at 2023? So it was 500 all through. For these 2 years, it was 500. But at the beginning of 2025, there was an increase, 500 by how much? By 100. Yeah, by 100. So it means that we'll have this 600 now all through. So let me see. I just drag this and I'll have 600. That's okay. Yeah, so we'll go to return profits, and the return profit for 2023, it's already here. What was carried forward? What was carried forward? It's already here. I've calculated it. So I just come here and say equals to. Sorry. Let me undo that. This. So it's okay. So I'm back to 600. Then I just drag. Yeah. So the values are okay now. Yeah. So we'll continue. So the return profit for 2023, it's already here. The return profit carried forward. So I just pick it. Enter. Yeah. So the total equity will be ordinary shares, share premium, and return profit. Yeah, that's the total equity. So I just equals to sum this. So it's 2586. And then I go to bank loans. We are told that the bank loans is the balancing figure. So I'll leave it. I'll leave it. Yeah, I'll leave it. So I just come here and say equals to for trade payables. It was 580. So the growth rate, so it was 580 times 1 plus the growth rate. So I lock it, then I enter. So I'll go to the second year and I'll pick this. I multiply by bracket 1 plus the growth rate, which is, I'll also lock it. So lock it, then I shift and enter. Yeah, so once I'm there, I'll just drag all through. Yeah, so I'll have the values there. Then the total liabilities is always equals to bank loan plus the trade payable. Yeah, it's bank loan plus the trade payable. So I'll just say equals to this, which we don't have that figure there, plus the trade payable. Then I say enter. So I'll just drag all through so that the values will change automatically as we get the bank loans value. So the total equity and liabilities will be equals to this plus this value here. So I enter. Just yeah. But as you know, the total assets should balance the total liability. So this is what I'll do. I'll just undo this column. Yeah, I'll do this column. Just come here and say equals to, yeah, this value here. Yeah, they should balance. So when I drag, yeah, we'll have those standard values. So let me just create the bottom top border. Yeah, then I'll create the bottom. Bottom border. Yes, that's okay because the total assets must balance the total. Yeah, so for us to get the bank loan, so how are we going to calculate the bank loan? So the bank loan will be equals to this 5162 minus what? Minus total equity, which is here. Yeah, minus total equity minus the trade payable. Yeah, so the what? Yeah, so it's 1938. It's 1938. Yeah, it's 1938. So it's supposed to be this minus this minus that. So you take the total equity, you minus total, and you can see the total liabilities have changed automatically. It has changed automatically on year 2023. Yeah, so this is the value that we have as bank loan. Yeah, so I'll go now to the finance cost. And we were told the finance cost was how much? Was 5% of the previous year. So I just take the 5%. Then I multiply by negative because I want the value to be negative, negative this. Yeah, because for now we are in 2024 and the previous year was 2023. Yeah, and that's why I'm picking this balance, this bank loan. Yeah, that's why I'm picking this bank loan. So I just say enter. So once I enter, it will give me the value automatically. So let me see if I can drag this. Yeah, so yeah, so yeah, so it means that this now you can see sum of K12, K20 is okay, 12 is here. Yeah, all the way. So once I drag, you just copy. So I'll go to income tax expenses, and because I locked it, I just drag this. So it means that when I drag, it means that the what I locked will be the 25% I multiply by the profit before tax. So my profit for the year, I'll also drag. So when I drag, it will be the difference between 595 and 149, which will give me 447. Then the dividends payout, I didn't lock it, but I need to lock it. Yeah, so I'll lock this, the ratio, I'll lock it completely so that when I drag, enter, so that when I drag it, yeah, it will multiply automatically. You can see it's F4, which is this, F54, sorry, F54, which is this, negative 26.32, then you multiply by K18. K18 is this, K18. So it means that you are correct. So you just drag, then return profit for the year will automatically be the difference between, yeah, this helps you to save on time. Then return profit brought forward will be brought forward for 2024 will be now the carried forward for 2023. So just select that. Yeah, then when you come here, you just drag. Yeah, the values will change automatically. Yeah, so now that I have retained profit carried forward, then I'll be able to bring it here so that I can balance. I can get the total equity. So I just come and pick it. So once I pick it, my total equity will just drag. So when I drag, these values change automatically. Yeah, so I'll now come. Let me see if I drag, it can copy for bank loans. Yeah, so bank loans automatically changes, and you can see even the total liability here changes to 2547, so that we get this value because the formula is already applicable. When I click here, you will realize that it's K49, which is this, which is total equity and liability, minus K42, which is which is total equity, then minus K47, which is trade paid. Yeah. So the format as the formula has been copied. Now that we have bank loans, now for 2023, I'll be able to get the finance cost for 2024. Yeah. So I'll pick the finance cost, which was 5%. Yeah. Then I multiply by the previous year bank loan, which in this case is 2024. So I just pick this, but I'll put a negative sign. Yeah, so once I have a negative, yeah, so this will follow automatically. So my profit before tax will just be the difference. Just drag. Then this also income tax to just copy, just drag. Profit for the year, just drag. Then dividend payout, because I've locked it, you just drag. Yeah, you drag. Yeah, and you can see it's F54. Then return profit for the year will be the difference. So just drag because the formula is already copied by Excel. So return profit, let me see if I drag, it will give me 1415 here. Yeah, it will give me automatically this return profit carried forward. So it will bring it here so that when I drag, it sum it up. So I'll have 1793 as the return profit for 2025. Then you just come to 2025 here and you replace it with this. Yeah, 1793. So just enter. So once you enter, you just drag this and the values change automatically. So even when I come and drag this, the values will change automatically. Yeah. So the value change automatically. So I'll have my bank loan as 1116. So I'll go to 2026. Yeah, take 5%. Yeah, the previous bank loans. So my previous bank loan was this. Yeah. Then I just enter. So once you enter, it makes your work easier. So you just drag all this. Yeah, this paper, you say that you have to save on time. So you just drag. Once you lock everything, dragging becomes easier. Dragging becomes easier. So just drag return profit for the year. Yeah. Then when I drag, yeah, it will give me 1793, this one. So it has copied the format. Then I just come here and drag that again. So I'll have 2241 as the return profit for now for 2026. So I'll come to 2026. So just come and select this, the return profit. And once I've selected that, I just drag everything. Yeah, so you drag, it will change. Yeah, the bank loan will change. And you can see the trend. The bank loan reduces. So it means that you are paying all through the year. It's reducing. Yeah. So when I drag, it will give me the value there will change automatically. So I have the bank loan as 930 now. So I'll go to 2027, which is the last year. And I'll pick the 5%. Then I'll multiply by the previous year's bank loan. I'll put it negative before it because I want the finance cost to be negative. Yeah, so once I get that, we just drag. We just drag for the just drag all through, drag, you drag this also, and you drag this. Yeah, so the return profit at 2027 was 2751, this one. Yeah, so I just come here and replace it. Just say equals to that. So that's the retained earnings. And with that now, when I drag, it will give me the total equity. When I drag this, yeah, as you can see, this is 934 total liabilities. But when I drag, it will change. Yeah, it's now 1631. So with that, you are done. You are done with that question. You are done with forecasting. So I've done the first part. We are saying the forecast financial statement for each of the years from 2023 to 2027. So that's how we are supposed to do this question. And you can see how many marks. Yeah, and you will get your 18 marks. Yeah. So the only thing you are supposed to be keen, you are supposed to know how to do forecasting. Then you know finance cost is charged for the previous period backlogs. And the backlog is the balancing figure on the statement of financial position. Yeah, then you know the tax rate, then you know that the company will maintain the same dividend payout. So you look at the payment ratio. You take the dividend, you divide by the profit after tax or profit for the year. Yeah. Yeah. Then you look at the adjustments, which we did on additional information number 4. Yeah. So I'll go to part B. Construct appropriate graphs, structures that will appear in the company dashboard summarizing the following. Yeah. So this was 12 marks. Yeah. This was 12 marks. So that's what you do. So, yeah, so this is what you'll do. So I'll start with the year is from 2023. So this is what you'll do. So I'll do it here. Or I can just have the values. Let me just have the values there. So I'll just say equals to. Then I'll pick this. Then I just drag up to, copy up to 2027. Let me change this to be clear. So I just go to home. Then general. Then for revenue, yeah, you just go to the statement, check up the revenue from 2023. So just click that. Once you click that, you just drag and it will copy all this up to 2027. So the last one is 4832. You can confirm. Yeah, it's 4832 here. Yeah, then the other item is the profit after tax. So I'll just go to profit after tax. See, yeah, it's the profit for the year. So I just pick this, enter. So once I drag, it will copy everything along that line. Yeah, so I'll go to total assets. So the total assets. Yeah, total assets is here. So I just pick this. And once I drag, it will copy everything. It will give me everything. So the next thing will be go to total equity. And total equity is here. So I just pick this. Then you just copy. Yeah, you realize that I spend mainly on time. Then the net profit margin, you know that is the net profit over revenue. Yeah, the net profit margin is the net profit over revenue. And the net profit is the profit after tax. Yeah, so this is what I'll do. The profit after tax is this. So I just pick this and I divide by revenue because that's the margin. And I'll hit enter. Don't know why it's giving me that. Let me see. So I just say equals to. Let me go to the original data. So I'll just take the profit for the year. That's the net profit. Then I divide by the revenue. That's the net profit margin. That's the formula for the net profit margin. So once I have that, you just drag it all through. Then I'll change. I'll just go. I'll go here and say general, or I say number. You just say number. Yeah. So once I say number, these are the margins. Those are the margins. Those are the margins. So I'll go to the last one, which is the debt ratio. I'll go to the last one, which is the debt ratio. Yeah, so the debt ratio is always total liability over total assets. So I just say equals to, I look at the total liabilities, which is this. Then I'll divide by total assets. Total assets is this. And then I enter. So once I enter, I'll just drag along that line. Just drag along that line. Then I change that to numbers. So that I have the numbers here. Yeah. So after doing that, the only thing now I'll have to construct the graph. Because now I have the data here, I just have to construct the, yeah. So to summarize the following. So this is what I'll do. So I'll just select this. Let me see if I can select up to here. Yeah, so alternatively, what I can do, because now I don't want to do away with these Roman numbers, I'll select this. Let me just select everything. Doubt if there will be a problem. Let me just select everything here. So select this. Yeah, because this is what is supposed to appear on the dashboard. Then you just go to insert. Then you go to recommended. They wanted a graph, stock charts. Yeah, so I can check. So I'll go with this. Let me see another one. Profit after tax revenue. So you can choose any. You can choose any chart. Yeah, any chart or graph. Let me see it now. So I'll choose this. Just say okay. Yeah, so once I say okay, let me pick from. Let me see this other recommended. Yeah, so I can choose that. Yeah, so the chart title, maybe you can give it just say a graph. Yeah, you can just say chart. Just say charts because the items are so many. Just write charts. Chart. Huh? Yeah, it's a chart. So you enter. Yeah, then you just come and drag this. down here. Yeah. So with that, you are done with that question and you score your 30 marks. Yeah, you score your 30 marks. And this is a compulsory question. Yeah, so you have an added advantage by scoring 30 marks on this question. As you can see this graph, you can see it's 0 to 7,000. Yeah, and you can see the net profit, revenue, total assets, net profit margin, profit after tax, total equity, and debt ratio. All are represented here. Yeah, all are represented here. So as an analyst, you can be able to interpret this information even to the board of management so that they can check the revenue vis-a-vis debt ratio. Yeah, and I know you also know how to analyze the profitability and solvency ratios. So that's how you're supposed to tackle that question. And without much ado, let me say bye-bye. See you next time.